Welcome to the College Investor Audio Show, where we talk about the biggest issues impacting millennial money, from student loan debt to side hustles to building wealth. We will show you how to get out of debt so that you can build real wealth for the future.
Well, we are entering year number 2 as the IRS came out with regulations requiring people to pay taxes on their cryptocurrency back in 2019. That seems like a lifetime ago, but it's not. Anyway, our topic today is we're talking about taxes and cryptocurrency. So let's get right to it. Welcome to the College Investor Audio Show. Okay, so for crypto traders, this means determining a cost basis so that a gain or a loss can actually be determined. Before a cost basis can be determined, all cryptocurrency transactions need to be calculated back to USD. While that might sound complicated, here's the good news. Software can keep track of cryptocurrency transactions, and it's gotten so much better over the years. That makes preparing cryptocurrency transactions for your tax return just a little bit easier. So today, we'll go over what you need to know about cryptocurrency transactions and taxes. Cryptocurrency involvement must be reported. Back in the day, people used to avoid reporting their cryptocurrency transactions and get away with it. Oh, that was nice, wasn't it? Glory days! It was the early days, though, and the IRS wasn't sure how to treat the cryptocurrency thing or collect taxes on them. But they quickly found out how. Times have certainly changed, and there's no way to avoid reporting cryptocurrency transactions. 1040 tax returns make it difficult to not see the writing right at the top of the return. At any time during 2020, did you receive, sell, send, exchange, or otherwise acquire any financial interest in any virtual currency? Now, there's no excuse for not reporting your cryptocurrency transactions, but which transactions exactly? Basically, any involvement that you've had with cryptocurrencies must be reported. This includes buying, selling, exchanging, received as a gift, gave as a gift, even used as a barter for non-cryptocurrency asset. It really doesn't matter what the transaction was. If you somehow, virtually, touched cryptocurrency, you need to report it. Okay, so here are just a look at some different types of cryptocurrency transactions. A cryptocurrency transaction that can trigger a tax event will affect your cost basis and your overall gain or loss. The following transactions will trigger a tax event: selling cryptocurrencies and receiving USD in return, earning cryptocurrencies, exchanging one for a different cryptocurrency, using cryptocurrencies to buy or sell goods. You know, cryptocurrency transactions can still be really difficult to track though, and part of reporting cryptocurrency transactions is knowing your cost basis. You need to know if you had a gain or a loss for the year, and that's only determined by keeping track of all your buy and sell transactions. This means either you're keeping track of it or an exchange is. Most cryptocurrency exchanges will have a log of your transactions, but not all will calculate your cost basis, so keep that in mind. There is software available, though, that can keep track of individual transactions on stocks, options, and even cryptocurrencies. This makes the process so much easier. But you'll need to enter in each transaction if the software is unable to import transactions from your exchange. If you're day trading cryptocurrencies, manually entering in each transaction is going to be a lot of work. Also, if you use multiple exchanges, well, that just compounds the problem. Below are some apps, though, that can help keep track of your cryptocurrency transactions. You can take a look at these: Coin Tracker, Trade Log, Bitcoin.tax, and CryptoTrader.tax. Given that reporting cryptocurrency transactions is now required by the IRS, using an exchange that has great tax-related export features is just going to make it so much easier to report come tax time. Some exchanges will send out a Form 1099-K, which has gross amounts for cryptocurrencies. Depending on the information being reported, you might be able to determine your cost basis. It may even be worth hiring a CPA or a tax advisor for some help in determining your cost basis and ensuring everything is reported correctly on your tax return. Reporting cryptocurrency transactions on your tax return. Now, the transactions actually fall into two categories: capital gains and ordinary income. Capital gains are for your investing activity, and this is what most cryptocurrency traders are involved in. Ordinary income activities are not trade-related. Let's break down the different activities involved in each category. So, capital gains, or investing, buying, selling, trading, ordinary income, mining, earning rewards in exchange for staking coins, interest on lending. Form 8949 is where cryptocurrency investment transactions are reported. This is the same form used for reporting stocks and other equity transactions. Cryptocurrencies are treated as property for tax purposes. This brings them more into alignment with equities. For gains on holdings of more than a year, they'll be treated as long-term gains, which are taxed at a lower rate than ordinary income. Long-term rates range from 0%, 15%, 20%, depending on your income level, of course. Depending on the type of ordinary income, it is reported on Schedule C or 1. Schedule C, income from mining operations, which would be self-employment income. Schedule 1, interest from lending or deposits. As you can see, there's a lot that goes into reporting your cryptocurrency transactions on your tax return. Oy, suppose you're a do-it-yourselfer and are comfortable using transaction software to track everything, determine your cost basis, and file your return. Good for you, my goodness. In that case, you can probably save yourself some money over hiring a tax advisor. Otherwise, you might want to hire a tax advisor like H&R Block, or even someone local, to help you through the entire process. Thank you. I don't think we say it enough, but thank you for being a part of this, for listening today. We're so grateful and really honored to come alongside of you and help you in any way we can. If you want to check out the website, thecollegeinvestor.com, you can see this article with some resources and links, and we have tons and tons of reviews, all kinds of cool stuff. Again, the website is thecollegeinvestor.com. Thanks again, and we'll talk to you real soon.